Welcome to TradeTheNBI.com. This is John. This report is for the 28th of December, and as we head into the end of the year, you can see pretty much flat. We were talking about this with the orange DOC here, caught between cyan and red, and that leads to continuation. But in this particular case, we had a nice breakup here of NBI magenta, suggesting to us that we were going to hold right around that 50% range. And in fact, it dipped slightly below it. We can already see futures ahead of it this morning, already rising back above it. Interesting that we're still getting a flattening of that orange. So you got all the positive crossovers. I mean, steel crossing cyan, shorts below the zero here. So there's just really zero negative attack on the market. It's just there's no real impetus or drive from buyers to push things up. At least from a S&P standpoint, there's a big headwind because we get the divergence, and let's take a look at it right there for the NQ. Much stronger DOC from a continuation standpoint to a negative bias, whereas the S&P was heading sideways. So even though there's that draw, it's not really affecting the S&P, but certainly we're below the 23% now on the NASDAQ. Has been significant pain given that white MBI lead throughout it. The only thing that was potentially holding it up was when we had magenta here above yellow. It still is at this particular stage, but you're below the 23%. You've got some small positives. It's about the only thing you can hope that's going to keep that one from making the expected move to the 0%. So we'll see if that blows out for the end of the year. And another pump and dump one. This one was beautiful because it never made no sense to me whatsoever. The pump in treasuries lowering the yield despite the fact that it was clear the Fed was going to do exactly the opposite and basically just hammered a bunch of people way on the wrong side of that one without any question. And now back down to the 100. I mean, that's a significant 10% move that was easily called for. I mean, it was all marked here on our positive extremes, and we talked about it as it was taking place because no basis in reality. And sometimes the market does that. It goes against what reality is, and that's fine. Eventually, it comes back to it, uh, and then easy enough for us to see the signal on that. From an oil standpoint, holding on should have some negative bias here with that spike of MBI white. So we'll see what the play is on that one. Overall, doesn't seem to be any glitches or supply constraints at this particular point. It's just you have some serious market inhibitions there that are preventing the free flow of oil. And as long as that remains the case, it's going to be elevated for no good reason. Really doesn't have to be. We already know that from just several years back, exactly where it was versus today. And from a gold standpoint, again, until we see more of the indicators, I mean, inflation is not roaring as much as it's just persistent. Um, so the price increases, everything that have already taken place, are locked in, and they're still accelerating. They're just not accelerating as fast as they were. That doesn't change the fact that they're still rising. And from a euro standpoint, of course, like we said, they're going to continue to pump it. There's no reason why this wouldn't continue higher. Um, Once they were supported off of the commodity purchases, made perfect sense to allow the euro to continue its rise. Bitcoin, again, I think that the confidence issue, again, is going to be the real factor. What causes that to change? We'll have to see. But in the near term, I think that it's lucky if it holds on to its positions and doesn't continue to erode. It just depends on the volume of trading and whether the larger players are holding on to their stakes or they realize that the gig is up. From a 50K standpoint, just flat holding above its 50%. It had a decent little run there and then it broke down and literally was flat for most of the trading day again, which was very soft. It was very clean from a 5K standpoint. Had the fake pump up pre-market right at the algo was the same 139 and the 38.93, right in where we were looking, and then boom, all the way back down, and it actually caught some support before hitting all the way to 38.23, and that left us right at the 38.60, which we've been hovering around, and pretty relevant because every little bit below we're getting the same amount above, and so it's kind of where you find um, what we would call an average weighted price, where people they're just looking for a particular range to get it. And so if you pay a little more, pay a little less, it all averages out to right around the same. And that's what they like to do when they're buying up large amounts of things. We'll see if that's the case because it usually leads to explosive move to the upside at a certain point. Anyway, we're going to have to deal with a few more days of clearing out the year end, and then we start 23, and 23 is certainly going to be about recession and whether or not they're able to stave off steeper economic decline given the rising rates and the constriction that's taking place to the consumer, and that becomes very relevant. So that'll do it for now. As always, though, trade well. Look for me on Skype chat. Have a good one.